Sunday, August 6, 2023, Maneco 64, home of alternative economics and contrarian views. So it's around 10:30 a.m. We're going to go out for lunch, my wife and I. We're going to celebrate our 30th wedding anniversary. It's actually tomorrow, but tomorrow is a Monday, so we thought go out on a Sunday. Rudy and I have been out for a walk very early. It is nice and sunny, but it's a bit crisp today. There's a cool wind out there. But if you are thinking whether I'm going to do the live stream, I am, 9 p.m. still. But I wanted to talk a little bit about Apple and the Nasdaq and also the bond market as it pertains to pensions here in the UK. I think we need to keep a close eye on what the government does vis-a-vis gilts and your pensions, potentially. So I noticed that the stock market reversed quite sharply on Friday. And to be honest, I don't follow it too much. Yes, we look at it every morning. But I had a look at the chart of Apple and it doesn't look very good at all. But I also had a look at this long-term chart of the Nasdaq, as you can see here. And it seems to be a blow-off, like a crack-up boom. It's parabolic and we're still within that parabola. So what's going to happen? I don't know. Do I think we could see a crash down to that parabola, to the line? It's around 11,500 for the Nasdaq. So who knows what's going to happen? So things seem quite interesting in the equity market. In the bond markets, I think a lot of the, how can I say, perma bond bulls, and they have a reason to be perma bond bulls because bonds went up in price and yields went down for like 40 years from 1981 to 2021. So I can understand why they think it's going to come back. I personally don't think it is. And I think people need to be careful with what governments do to pensions. So yeah, I saw this article yesterday in the Telegraph. It says, boost for Hunt as Britain's largest pension scheme to return to buying gilts. It says fund plans renewed investment UK debt after interest rate rise to fight inflation. So I'm going to put a link to this article below in the description under archive.ph, so you'll be able to read it. You don't have to subscribe to the Telegraph. But one thing that was interesting is that this fund, it's called National Employment Savings Trust, or NEST. And the way this article comes out and talks about how this is positive, it looks like investors are coming back to gilts. But the thing that I thought was interesting is here in the middle of the article, it says NEST, which is publicly owned but operationally independent, has been joined by other pension fund giants that are also planning to increase their investment in gilts. So the other one is also related to some pension reforms that were implemented by Labour in 2008, and it's called the People's Pension. It says this pension retirement manages pots worth 20 billion for 6 million members. Said it's considering more gilt purchases. So what am I trying to tell you here? I'm trying to tell you that the government is pushing these public pensions. They look like they're public. They might be operationally independent, but you can bet that the Treasury is in contact with them saying, well, look, gilts have gone up, the yields, maybe you should consider buying gilts. A little nudge, right? But I think maybe in the short term, it could be a good trade. But longer term, I believe bond yields are going to stay elevated and go even higher, as you probably know. And that's going to hurt the value, capital value of bonds. So I think personally it's the worst time to be investing in bonds. And if you're going to invest in bonds, do it in the short-term bills, like 1 month, 3 months, 6 months. And even then, it's not really protecting you against the debasement of the currency. So that's all I wanted to let you know about. And I'll talk to you later on tonight during the live stream. So I wish you all a very good Sunday. Take care. Bye.